Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek. We're seeing mostly higher prices except for Chicago wheat today, as well as April live cattle. Everything else is up in the cattle market, Brad. And I would anticipate we're building on last week's cattle cash strength and the ideas we may see higher cash again this week.
I think so. Friday, late trade again Friday. Michelle, thanks for having me on, by the way.
You bet.
161 and then some 162 right in my backyard. Heck, I got 162 on Friday afternoon. And some 162 trade in the South as well. So, solidly 1 to 2 higher, and maybe in instances more than that. Already have some inquiry from some of the packers this morning, particularly one regional packer.
Wow.
Sounds like we actually are adding some kill to a Saturday here in some cases. I think maybe 2 weeks ago, you and I talked about, are we going to see a slowdown in demand? Seasonally, we do when you get, a week ahead of the Super Bowl, blah, blah, blah.
Boxes are on fire.
No kidding. Turns out not so much. Up about $8-9 from probably that when we started to talk about it. Now, instead of slowing down the kill, it looks like they're trying to gear it up. And the weather, we can't talk about cattle without bringing that up. Those of you that don't feed cattle, if you think it's getting better, it's not. The closeouts are the worst they've been all winter. I can tell you that from experience. And now we're looking at another system. These average weights, if you don't follow that very carefully, like some of these segmented weights that you get breakouts of formula cattle or cash negotiated cattle. I saw one formulated breakdown one day last week of Nebraska where the weights were more than 70 pounds less than a year ago, 70 pounds less than a year ago. So, particularly in Nebraska and Iowa, the effect of this weather is real.
Wow. And the average weight's, I think, down 22 pounds from last year for
right.
last week. So that was big. And to your point, I wrote down choice boxes were up over $11 just last week alone. So
there you go. It looks like demand is up.
So are we just going to continue to keep grinding up into these contract high areas? We're kind of getting close again here, but this has been a methodical move. We like these this way, don't we?
Yeah, I love a bull market. Been bullish a while. I think there's every reason fundamentally to be that way. And yet, you look at, so April cattle, okay, what 165 this morning, we had a nice little burst. I think some of the hedgers had to cover shorts. I think you had some of the people that were reacting to the news on Friday, and it's our first chance to trade, obviously, for the week. So you have that first blush of buying, and then the market pulls back. So you probably, fight with a little bit of this recruitment of new buyers. Now, having said that, there's a short for every long, and the smartest short in the world has got very little profit. I mean, the guy that sold the stone dead high's got 20-cent lead in it, So, maybe it's about time to put the shorts in the over the sawhorse. I guess to me, that's what the market looks like now. A little tweaking here. You can see what the funds still do. There's a big fund pre-roll today, and that's why April's the worst thing or the weakest up here, even though it's still higher. So you're seeing some fund roll from April to June today, but to me, the tone of the market's still pretty good.
Any reaction from this atypical BSE case in Brazil?
Well, I think that gave us a little boost. I think the market's kind of waiting to see if China does what we expect them to do, which is temporarily suspend imports from Brazil. That's what they did the last time. The Brazil doesn't make any friends with how long it took them to report last time. They've been a little more timely this time. I don't know if that'll change it. The people I talk to think they're still expecting maybe a few week stoppage there of China taking Brazil beef. So it's not bearish, certainly not to our beef, but maybe it's a kind of not a big factor, but it's not negative. That's for sure.
Big up day in the hogs as well, and that's being pushed by the cutout values, you think?
I think that's the catalyst. Yes. For instance, pork bellies, one particular cut up $25. Can't even probably say that with a straight face. Like, how can that possibly be? Whatever.
Right.
But so we got up on that news. But don't forget that we believe, even though we haven't had a commitment of traders report for quite a while, that the funds are a big short. And sometimes the market moves on who's wrong and not necessarily who's right. So I got to believe you're getting a bunch of fund short covering here as this thing starts to look pretty good on a chart today. So I would say the cutout higher and now being fueled by liquidation of a short position.
Yeah. And so that's likely to continue for a couple more days here if they are short. Okay. And the grains, obviously soybeans and soybean meal getting pushed by Argentina weather and now some frost in that area, but we didn't take out last Monday's highs. You don't have soybean meal above the $500 mark. Those are kind of keys here to keep this going, right?
For sure. I'm a little, I don't know. I'm a little slow here to really, buy into this whole notion of frost. I mean, I know when we have early frost here, it's hard to tell right in your own backyard, let alone Argentina, where, first they've had a drought, right? And you'd think that the crop would have been hurried up along. I have a hard time really believing that this is a market factor, but at the end of the day, you got to pay based on where the market settles. A gap up opening, we kind of fluttered a little bit here. I'll be anxious to see the close. I'm not going to lie. I'm more inclined to be bearish because of the large size of the Brazil crop and because of what appears to be a shifting of the moisture pattern here in the United States. So if I was a hedger, and I am, November beans around $14 looks like a great place to consider starting. And the corn thing is just stuck in neutral here. We still have too strong a basis to really get the market to break, but with this wheat tipping over, I don't know. I think the path of least resistance on the corn might be lower.
The other offset of that is that there is some concerns about what happened over the weekend with President Biden going to Ukraine, and maybe that hurting our Chinese relations too, right?
Very much so. I was surprised, listening to the news with the day off. I thought, wow, that could be interpreted as quite negative in the trade business we do. And then here we have the hogs $3.50 higher. So I guess not. Some people worried about, well, is this going to, shut down the trade corridor out of Ukraine, which would have given you a different reaction on the wheat? Certainly not. So it looks to me like the market's maybe worried that, not so much worried about the hog side of thing, but wondering whether we were going to, hurt any kind of relationship we have over there. But I mean, this isn't new news. I think we have that worry in the back of, at least I think every export trader has that in the worry in the back of their mind every day.
Okay, thanks for joining us. That is Brad Kooima with Kooima Varilek and Markets Now.